Hello, welcome.
Hi, everybody.
Welcome. Sorry for the delay. Good evening, everyone. Good afternoon or morning, wherever you are dialing from.
Good evening.
Nice to see friendly faces around. Good afternoon. Hi, everybody. Welcome to the dynamic huddle of Parima. Once again, we are having this in a different time slot, and thank you very much for taking out some of your time so that we can talk. We can have this discussion with our esteemed panelists. Before we kind of get into it, we always like to do a little check-in, make sure everyone's doing all right. So wherever you are and whoever you are, if you can drop a chat, say hi, use the chat function, be able to tell us how you are, wave, give us some reaction, that would be great. Just to get the interaction up as well, we also like to make sure that we have a little poll for you as well to check in on how you're feeling today. So if we can pull out the poll. How are you feeling today? Do you have, can't wait to exercise for those who are stuck indoors? Let's just get started. Are you in severe need of another teleconference? Or do you just have the Friday feeling that's coming up tomorrow? So just a little cheeky kind of introduction from us. And hopefully we would have your scores coming in today. And maybe let's look at how everyone's feeling today. Dan, could you please put up the poll results, please? Great. So mixture of everything. Most people just want to get the week over and done with and can't wait to exercise. All right. So that's great to all have that shared, connection in that area. So today, really happy to be bringing in a panel. Panel speakers who are extremely distinguished. I will leave Dorji to introduce them, but it's really about how can the insurance and risk industry help to ensure health and safety in this kind of evolving and uncertain situation, especially when all risk managers are preparing to come back to operations. Perhaps for Parima members, it's really thinking about what are the types of solution that's available for our return to work. And more importantly, what are the type of questions that we need to be asking from a risk perspective? And hopefully our panelists will be able to give some ideas on that. Without holding back, Dorji, I'd like to introduce Dorji-san, CEO of Perlin, to start us off today. Dorji, please.
Thanks so much, Stacey. Hello, members. And first of all, thank you so much for the opportunity. So just as background on myself, I've done 20 technology startups, exited 4 of them. My wife and I do a lot of angel investing, so we've done about 30 angel investments. And we've really been looking at the COVID world through the lens of the International Chamber of Commerce. So I'm a special advisor to the ICC. So the ICC is the institutional voice for 45 million businesses. And the Secretary General has made the COVID-19 situation obviously one of the top global priority for the ICC. And so it's through that lens that we've really been looking at how can risk management, how can insurance, how can the reinsurance industry assist in the restart of the economy that right now, if you were to look at the political pressures, where lives and livelihoods were hopefully going to be matched in check, we're now definitely starting to see political pressure building for the livelihoods and a question around, where are the lives gonna land? So if you look at the numbers today, 350,000 deaths as a result of COVID-19 globally, roughly 5-6 million people infected. And, when you balance that to the 30 million plus unemployed just in the US, when you look at the other global impacts, this is really the question. As the economy starts to unlock, how do standards, norms, technologies, and the other sorts of tools that we have in the arsenal play to bear? And so on the panel today, we're incredibly privileged to have some world leaders. First of all, we've got Jonathan Rake, who is the CEO for Swiss Re Corporate Solutions. We've got Andrew Minott, who's the Aon CEO for Singapore. We've got Dr. Chester Drum, who's he's a professor from the NUH, the National University Hospital of Singapore, but also is a patient advocate and a researcher. And we've also got the irrepressible Steve Tunstall, the General Secretary, and your co-host, I'm going to say, because he is incredibly vocal. So just to kick things off, I wanted to turn the questions to Andrew and to John as you know, as leaders of industry. How do you see the COVID-19 reopening? How has it affected your organizations, as leaders of organizations internally? And most importantly, how does this affect your external outlook as things start to evolve, as we start shifting back towards reopening?
You want me to go first, or you want Jonathan to steal the thunder, Georgie?
With that, I'm happy to go first, George.
Absolutely, please.
No, I wasn't cutting you off.
No surprise.
Happy for you to jump in, Andrew. I'll add to your esteemed comments.
Yeah, I mean, it's a valid question. So the thing for us is always, when we talk about risk, what tends to happen is, as risk managers, and we've been saying this for a long time, the conversation always turns to the physical. But I think what C-19 has really showed us is that the most obvious risk to everybody is people. And we've been advocating for a long time closer collaboration and conversations between not only the chief risk officers and their CFOs, but also the CHRO with the CEO. So it's a 4-point conversation: CFO, CHRO, CEO, and the risk officer. Because at the cornerstone of all of this is the risk to people. And now having your workforce disjointed and so many working from home is definitely going to put a strain on how you manage that spread of risk. So C-19, particularly in the financial services sector, has been all about people. We talk a lot about our business only being about people. And boy, did we realize that it's about people when suddenly we couldn't be with each other. And I think a lot of businesses come to that harsh realization that perhaps we always felt that we were on top of it. And when I say we, I'm using the royal plural, as in every business globally felt we're on top of that people risk angle, and we all knew how it was going to work. But COVID-19 has shown us that there are potentially some gaps. And where we've implemented what are and have been mostly effective plans, a lot of businesses responded very well. I don't think everyone will be open and honest about how much of that was in the situation room reaction, rather than being absolutely prepared for what they had to do around moving people home very fast and dealing with communications, technology issues, etc., government instructions, changes in regulation. I mean, I'm sure you all spend a lot of time thinking about the impact that the regulatory framework has had on each of our businesses coming out of C-19. But really coming to grips with that people spread and thinking now about return to work. It was actually pretty easy getting people home, but getting people back to work now is the big challenge, because guess what? We're human. We all have our own thoughts and opinions, and they're not the same. And that's what makes us special, is the fact that we're individuals. So now we have a real democratic view of what's good for me and what's good for you. And so challenges facing risk managers now is not only to think about what the risk is, financial, physical, people, or otherwise, but how do I tie that back to what we would call the softer aspects, to making sure that your employee base is absolutely okay and in step with what you're doing as an organization when you plan to bring them back, and first and foremost, keep them safe. Because otherwise, the worst thing that can happen to you is people start to vote and voice their pleasure or displeasure with their feet. And that's the end of it. You know, the workforce didn't become sick and leave you, they just left you. So communication becomes so key. And so starting to really understand the way that we communicate with each other about not only risk, but how we look after the future state of our business and how important people are to that is, for me, number one in everything that we're doing right now. I'll pause there, otherwise I'll go on forever, and give it to Reiki.
Thanks, Andrew and George. It is Jonathan Rake from Swiss Re here. I had to dial in by the mobile, not on my laptop, because of some issues. So hopefully you can all see and hear me okay. I absolutely agree with Andrew's comments. I think people are right at the heart of this. And so let me just continue the theme a bit there, touch on a couple of points, and then I'll come back and make a comment, Georgie, just about the industry. So from a people perspective, maybe a couple of different angles. Andrew touched on the reopening. Super critical, right? We talk about the reopening as in our teams as a massive natural experiment. It is an experiment, right? We have not been through this and to this scale. And I think a key point I wanted to make here on this reopening topic is, as we go through it, I think the audience here, I've got a lot of risk managers on the line. We've got some people from the industry. I've got some colleagues, so quite a strong company corporate representation, and many of you in risk. If you think about how governments have reopened and gone about it, hugely different, right? Different approaches. China and some provinces have only reopened when they've got 0 cases left. We've seen Spain and Italy going back with 1,000 cases a day. Very different approaches, very political as well. Companies are no different. We're going to take extremely different approaches to reopening, and we have to learn. So you've got to do this parallel sort of alignment and looking at companies just as governments and countries would in the reopening. And from that, I would say 2 things really stand out. We have to share best practices. As a risk manager, you can't just look at this as what I'm going to do for my company. You've got to learn, right? As we've seen countries that have really looked across their borders and learned from others on social distancing, all these other topics. So first point is need to share best practice. The second one, and I'll give you a live example, is really around building this culture in the reopening around learning and adaptation, right? And it also goes to the sharing best practice. But what I mean by that is normally we like to put in place a fixed approach and process to dealing with something from a risk perspective. I don't think we should do that here. In the case in our Australia business, we had a plan which we had put in place. We said, this is what we're going to do for the next month. And then we took a decision yesterday that actually we're going to run it on a 24-hour basis. There's so many unknowns, so don't be rigid in your approach. Be agile, be able to adjust, learn from others, because I think some of the countries and governments that have really struggled have really taken a very narrow focus. So that's just a bit of a point on that. The second, on the people side, that I'll touch on something slightly different to some of the themes that Andrew was talking about, was culture and leadership. I believe that you're going to see some really interesting developments on the leadership side. Leaders have been tested with their own sort of resilience, but they've also had to be, in many cases, a lot more agile. Decision-making, certain processes have been streamlined. So we're taking a lot of learnings, and maybe, just maybe, we might bust a bit of bureaucracy through the learnings in COVID. But they've also had to be more empathetic. And I think hopefully that holds. I think the cultural piece around whether you see a long-term cultural shift, I believe will probably more come from the teams themselves, because what we've seen is a lot of people, the line managers, teams of 2, 3, 4 checking in, they see the kids in the background of all these video calls, they got to know their colleagues a bit more. And that common battleground has been one thing. The battle has been against the virus, right? And it's sort of corralled us all. So we did a pulse survey with our colleagues, and we were very pleasantly surprised to see very high percentage, 90% of people were very favorable towards their well-being. It was earlier in the lockdown scenarios, but companies supporting them, they feel empowered, a lot of positive results. I think the challenges around workload that comes with this, but this corralling and this teamwork, if you can combine that with more empathetic leadership and quicker decision making, could be quite a powerful thing. So that's a little bit about the people topics. Because it's an insurance related and risk related, I thought I'd just give you a quick snapshot on how we as an organization see the bigger topic of what happens to the industry. And this is a huge topic, but just a couple of points from our Swiss Re Institute, which does a lot of research around it. We actually don't think that the insurance industry is going to be impacted in the same way that other industries will. We believe we'll weather the shock. And there's 2 reasons for that. I think the first thing is, we're less impacted by revenue downturn. And the second point is we're also less impacted by supply chain disruption as an industry. Another positive is what we see coming out of this is we think that with all this government intervention, it's definitely sort of shining a light on risk practices. And that combined with some of the clear digitalization topics coming through, we think this sort of opens up, extends barriers for insurance opportunities. So we feel quite positive comparative to other industries. What we do know is very sharp profitability impact in 2020. And actually revenue is different. It rebounds quickly. I could talk a lot about that, as Andrew can as well. If anyone wants to go into a bit more on the industry impact or company specific, we can, but I'll ping it back to Dorji to get some others involved.
Fantastic. No, I'm definitely going to loop back on some of your comments. I mean, just at a high level, I don't know, John, do you think that it's actually the right approach for companies to have to deal with this ad hoc the way that governments are? Because, you know, largely people would certainly be wondering whether or not governments should be dealing in such a fragmented way and the problems that that causes. But why don't I quickly roll on and introduce Chester. So Chester, with your medical background, I think giving good context to this conversation before we loop back to John and to Andrew, would really be looking at, say, for example, right now we're in a phase of uncertainty. You know, is it nasal swabs, PCR? When will immunity passes be available, or will there be immunity from antibodies? You know, when is a vaccine going to come? So from a medical context, how are you seeing, one, the kind of, maybe give us some framing on the global state of the medical addressing of the scientific challenges, but then two, also looking at some of the technologies and some of the things that risk managers in particular might be able to employ. And then, you know, lastly, really just kind of looking at how, you know, in the future, how this potentially could roll out, particularly with, you know, the politicizing of the WHO, and, you know, who do we look towards for trust, and you know, to what John was saying, you know, the different approaches by different countries.
Thank you for that simple question. I guess yes is the answer. So yeah, so I think you posed sort of three different types of questions there. So we'll just do a quick recap of where things are in terms of the science. So as somebody who studies science professionally and is an academic physician, and certainly has been at some of the best institutions in the world in that role, I must say there's just a little bit of Schadenfreude watching the entire global community now forced to become epidemiologists in their own right. I mean, it's amazing that they flatten the curve and all these types of epidemiology prediction models. They're common currency in what everybody discusses. The reason that's a Schadenfreude view is that now everybody else gets to see the same types of uncertainty that myself as a physician faces with every patient, that myself as an epidemiologist faces with every disease model where we try and predict outcomes on a community scale. So I think I'll frame my answer by saying that uncertainty and dynamic truth in terms of the science is par for the course for this field, and no one should feel that this is under research or scientists aren't doing a good job. The reality is this is a 4-month-old disease, and it's unbelievable how quickly technology is catching up. So just some discrete answers that may or may not be correct, but at least I'll give an estimate to some of your specific questions. You know, as things stand now, the PCR test, which you hear about, is good at figuring out if you have a current infection. It's very good at saying that you do. Then you'll hear about antibody tests coming up. And the big players there are Roche and Abbott, Becton Dickinson, and a few others. But those tests are very different than the past tests. Those tests are very high quality, and they will help to identify who's had the disease in the past and done well and is presumably safe going forward. Those will be globally available at a very large scale, let's just say within a month. And of course, that may differ in region. And then lastly, there's the question of the vaccine. And nobody has a clear answer to that, but given the scale of the economic injury, there is no shortage of resources to get a vaccine to market. The very earliest one could be reasonably dealing with a functional vaccine with good evidence is 8 months from now. 6 months would be a miracle, but not impossible. Reality is 10 months or longer if the science gets more complex. So to take that sort of global view and then start thinking about technology, one of the big differences between now and the 1918 flu, even versus the SARS epidemic, past yellow fever epidemics, is of course the unrelenting prevalence of technology. That is a good thing and a bad thing. And you've seen governments create centralized databases for an entire population, largely, with initial good intentions to try and solve epidemiological problems and help guide individual behavior to improve health. The flip side of that coin is once you have that data in your database, it doesn't go away. So then post-COVID, how exactly do governments now regulate populations when there's no COVID? And of course, that problem is much more apparent to individuals than it is governments, and there's pushback. And many of those governments you'll see, especially outside of China, have now abandoned that approach. It's different than public health, which is a different vertical. So with technologies such as blockchain, the preponderance of smartphones and their processing power, for the first time, COVID really allows the decentralization of medical information into everybody's hand such that you can control what you have. And of course, there's a background, and the reason I'm included here is a project that we've been doing with the International Chamber of Commerce, which is an ultra-large business organization with 45 million business members and over 1 billion employees. And with International Chamber of Commerce and some other key stakeholders, it's really been a great window into how businesses can lead the ethical development of the use of medical information. And strangely, maybe ironically, the health profession themselves has not been particularly active in that regard. So, I think the AOK Pass program, which is what ICC has been developing, is an example of that moving forward, of how individuals can use their own risk and retain control over their own activities to adjust essentially risk control rules and measures from a societal side. So I'll close that off by now. I think I even outspoke Jonathan, which may be a world first. So I'll just close with a little bit of philosophy that, when COVID shakes up the puzzle, there's really an opportunity for businesses and risk management professionals to put things back in a way better than they were before, that both protects individuals and reduces aggregate risk. And I think that that's a long time coming. And that's why, although I absolutely abhor the injuries from COVID-19, I think that the institutional opportunities are quite good.
Thanks, Chester. So just before I go to Steve, I also want to encourage anyone in the dynamic huddle who wants to ask questions. Please feel free to just go into the chat section and ask a question. So we wanted this to be as much about what you're concerned about, what's on your mind, as well as what other people. Wow, that's pretty fast. Thanks, Devesh. That was like instantaneous. So yeah, no, please keep asking questions. So Steve, as a recovering risk manager turned entrepreneur and technologist, how do you see, for example, with Parima members, how do you see this COVID-19 restarting? What are the risks that you see at a high level? How can we assist? Which areas of concerns do you really see on the horizon?
Well, I think the other panelists have already touched on the key issues. It's basically, how do we get back to what is something like business as usual as soon as possible? And I think the key issue for risk managers is, as Chester has rightly said, every death from this is a real tragedy personally and for the families involved. But for risk managers, to some extent, this event is actually an opportunity. It's an opportunity to reframe their position in the organization. It's to restate their relevance and importance to the board. But the only way you can do that is by really now looking on a case by case in your organization. What do I need to do now? What can I do now to help the company get back to normal faster than would otherwise be the case? And ideally, at least faster than your competitors, so you can reap the rewards of being fully operative when others are not. So I think looking at the issues that have to be resolved, and thinking about the AOK Pass and all the things that go with that, it's really, particularly for multinational companies, this is a very complex time and a very unusual time. I mean, we're seeing, as has already been mentioned, disparate responses in almost every single country, and that's just faintly bizarre, to be honest. We're seeing the vast undermining of the World Health Organization, and if there's a World Health Organization 2 somewhere in the wings, I don't know where it is. So we've only got the one. We ought to be doing our best to support that. But if that's becoming some sort of geopolitical football, then there's a real issue for international companies thinking about, well, I can't wait just for pure regulation, 100% confirmed regulation. I've got to think about how to get out ahead of this thing. And you know, technology has got to be one of the ways that we think about this. I don't really want to say too much more because I want to sort of open this up to discussion and panels. And I'd really encourage risk managers. Yeah, we've got another good half an hour. We're extending this session for the full hour, so we've got plenty of time to discuss things. But you know, please raise specific questions that you have from your company and your organization, and the challenges that you know you're going to face. And let's try and work on this together, so we can share with each other and think of how we can find some solutions together.
Thanks, Steve. Andrew.
Yeah, thanks. One of the things that I became apparent in the dialogue earlier was we talked about the differences in approaches on a by-country basis. And one of the areas where I've found our organization, speaking as Aon, has been effective is that we did two things notably. Number one, in all of our plans, whether it was work from home or the current return to work planning in every country, we followed Aon's plan. So we didn't go to what is the government doing first or what is the local environment doing first. We went to what is our program for going home or going back to work first. And we got that sorted out in every country and globally coordinated, first regionally, then globally coordinated. Then, of course, what we do is once that has been sorted out, we then link that back and do parallel comparison to what the local, to the particular country. So, for example, in a Singapore context, country I believe has run this particularly well, we just had to align with whatever the government regulations said we could or could not do. So the amount of change we actually had to make compared to our documented and well-drafted plans was minimal. I think if you went out on your own and just went on an ad hoc basis to what the country was doing in every case, there's a risk of moving outside of the parameters of what you've spent so much good time as risk managers setting up. So I would say stick to your form first, and then adjust to what was outside of that. The second thing I think we've done very well is we haven't done everything our competitors have done or others in our industry have done. And there's a temptation to always do that. So, you know, for example, what are our colleagues across the road at another global organization doing? Have they moved earlier than we have to going home, and why didn't we do the same thing? Well, because we didn't feel that within our own plan it was the right thing to do at that point in time. So sticking to your form again, and being confident in what you're doing. And I think return to work will be in exactly the same way. And I would go so far as to say whatever the future plans are for organizations on the future of work and risk, because actually you could change it around and call it the future of risk as much as it is work, because your risk workplace has now arguably become someone's home, someone's bedroom. And how does that affect you as an organization in terms of operational responsibility and organizational liability to your colleagues who are now sitting in a workspace and place which is no longer directly under your control as a risk manager. So that future of work becomes future of risk conversation at exactly the same time, which is why, as I said before, you have to tie in the HR component with your risk manager conversation really, really closely right now, and not have either of you trying to play catch up with each other in the future.
Fantastic. So actually what I might do is go to one of the questions from Devesh, because it ties in with what John was saying before about supply chains and some of the potential extensions of that. So Devesh from Mondelez Mumbai has asked, what changes do you see from supplier risk management point of view? Certain businesses have seen sharp increase in the SC costs, and certain suppliers have shut down out of business. Do we expect suppliers extension clause triggers due to impact of COVID-19 lockdown, especially where pandemics is not an insurable risk in most of the markets? So it kind of ties to some of the liability questions that you were hinting at, John. Do you feel comfortable throwing in your 2 cents?
Yeah, absolutely. There's going to be a lot of 2 cents on this, and I would encourage the dialogue. Look, I think for us, supply chain is probably one of the top 3 topics that we're looking at. And Swiss Re produces a Sigma report. There's going to be, this isn't a plug because people can access this pretty much and often do in the industry. But I think around September time, we've got a Sigma report coming on a lot of this stuff. But I've started to engage in some of the discussions with our experts in this field. And absolutely huge change. I'll give you a couple of thoughts. I'm not going to talk about a specific extension because I think the products piece, I'll probably say yes, but I think the products development is going to come. It's probably too early to see where those trends, but let me give you some of the macro trends. I mean, the first thing on this topic to say is of the Fortune 500, 200 of those companies had operations in Wuhan alone, right? That's not just China. I mean, the impact on supply chains has been huge. Obviously, China early on and for quite a long time, but China being what it is, right, as a manufacturing hub in the world, major disruption. So many companies, actually, I was on a call yesterday with a couple of people in the food industry and asking about food risk, etc. It actually turns out some of our findings are that the food industry is maybe one of those that's been a bit more resilient in terms of supply chain. There's been waste, there's been an issue with food not getting to the very needy in developing countries, but overall their supply chains have been okay. Other industries, totally different, right? They've had to very rapidly move to digitalized solutions if they've gone B2C, etc. I think some of the things that you're going to see coming out of this, the first is a big theme is potential for light manufacturing to return to countries. And the reason why I say that is you've had the situation where a lot of work, and many risk managers on this call have done a lot of work on the supply chains. We've always looked at, do you have a second processing plant? Do you have a second supplier? And many of that's been looked at things like natural catastrophes, right? If I lost this plant to flooding, is there going to be another supplier? Haven't necessarily looked at this closed down borders topic that pandemic has caused. And so if you think just about the pharmaceutical industry, right? Reliance of a country on getting to Chester, I'm sure he's got a view on this, on critical medications and stuff. If you've got your manufacturing plants for key components of those medications sitting in another country that gets closed and you can't get access, big issue. So does light manufacturing on some of these key industries start to return to countries? Big opportunity and challenge for the industry. Opportunity because potentially there's rebuilds, there's new plants, there's engineering contracts that go, et cetera, et cetera. The challenge is you start to see things like parallel supply chains being created, where companies potentially start running a different supply chain to ensure that you've got this backup to this pandemic problem. The issue with that is your production costs go up, right? So you lose the efficiencies. So parallel supply chains, return of light manufacturing into countries. I think another supply chain topic and theme we see, which is a more positive, is what we call SDNs, right? So the digital supply networks, DSNs. So this is really end-to-end digitalizing your supply chain where you've got much more clarity. What it does basically is it removes functional issues, bureaucracy in companies, different systems, different people getting involved, and you have this is your world. Dorji, you can talk about this from a blockchain, similar, right? So if it's digitalized, it's clearer, it's more efficient, it's more robust. I think that's a big positive coming out of it. Summary being to a very good question, a lot of change to come, huge topic for us. In terms of products, yeah, there's going to be a lot of innovation. Wordings we'll have to see. But this is a question I'd also throw back because there's others sitting there in industries that are being impacted. So if anyone wants to share how your industry and how you're looking at it from risk, we had to learn as well.
Absolutely. Yeah. And if anyone would like to make further comments on this topic, we can always loop back. Andrew, did you want to make a comment or should I move on to Chester?
No, I'm good with the supply chain. Jonathan covered it well.
Okay. So Chester, there was a question around looking at the different, this is a question from Glenn. For manufacturing, the suppliers, haulers, and truckers will be visiting your premises as part of a normal business. How do you ensure and put controls to ensure that your premises is free from COVID? Any suggested controls or best practices? maybe kind of coming back to some of your discussions around, different methodologies for being COVID clean, or some of the best practices that you're starting to see, especially in the travel corridors. Would you like to answer Glenn's question, please?
Oh, another easy question. So, yeah, so there are starting to emerge some best practices for getting back to work, but the reality is that there's certainly no global consensus. So I can say from a scientific perspective, the best you could conceivably do with the current science, assuming someone's coming through the door, the best you can do is leave them at home, of course. But assuming they're coming through the door and it's critical you have no COVID-19 workers, the best you can conceivably do is the PCR nasal swab. But the problem is that test is not perfect at clearing people. It's only very good at finding people if they actually do have the disease. So if you want to guarantee no one has the disease, it's actually not a great test for that. Nonetheless, it will exclude some people with active disease. The antibody tests, which are available now, but again, will be much more available within a month. I mean, and by the way, just Roche by itself, using their COBOS infrastructure, they can scale to 100 million tests per week globally with their supply chain. Abbott similarly has an extremely large serology program. So then anybody with antibodies that indicate a recent infection, you can also leave off the list, and they do a quarantine. So with those two clinical tests, plus monitoring someone's symptoms, plus doing temperature checks, as far as I know, that's the best you can possibly do. And in any jurisdiction, if you did that, you're going to due diligence and beyond. And so all of this is a balance of essentially cost and benefit. And as this group knows very well, so even that gets judged in the context of how important is it for that person to be in that risk situation. So what would be really nice, and this, I have not seen deployment of this, but the types of actuarial and cost benefit analysis, health tech analyses that exist in the industry now, the more those can be individualized using technologies, then you have the ability to say, look, you're 70, you're at a much higher risk. Let's see if we can accommodate that risk in a precision way. The reality is if you're 30 and you have some basic protective measures, the chances of you dying from COVID is extremely low. So, it all comes back to the same types of risk concepts that this group is very familiar with. I've always come at them from a clinical perspective, but as we apply those to populations and industrial liability, it's going to be the same thing moving forward. And again, technology solutions that can carry that individual risk, that can carry that health information and make it usable in a way that reduces aggregate risk, I think there's a huge role for those.
So yeah, and I think, Glenn, to the heart of your question, I mean, and this is why some of the individual company behavior or plans for return to work and different countries having different plans for return to work is problematic, is because, exactly to your question, where are the standardized policies? And so if you, for example, read the BCA just 2 days ago released their return to work requirements. It's it's like 40 pages long. And this is now what the construction industry has to deal with in order to return to work. If you look, IATA and ICAO and the ACI, all on aviation, have also released a working report on how to get travel started again. But again, the question comes back to who's going to provide jurisdictional support at a governance level. So if there's no political support, and this is to your question, Walmart has been sued over the death of one of their associates at a Walmart store, and Australia, there's criminal litigation because of people in aged care facilities having COVID. and deaths resulting from that. So now linking that question, and this is a question for all three, initially Steve, but also definitely for Andrew and for John. It looks at, how can the insurance industry actually, not as an opportunity, but certainly as a pillar for recovery, how can we find certainty in uncertain times, especially if governments aren't providing certainty? So here the question from Ken L is, there will be high demand for business interruption cover, and that would now cover pandemic risks even without material damage. Would insurers open up to have this available to all markets? So the bigger question there is, how can the insurance industry, how can the reinsurance industry, and how can the risk managers actually traditionally play a role of a backstop, but how can they actually now extend a bridge to a more viable restart?
I mean, I think this comes back to some of the basics of insurance. I mean, much as risk managers would love Jonathan just to open up the wallet and keep paying all the money till he's run out, it's not going to happen. You've got to have properly defined risks. You've got to have properly defined insurable risks, and you've got to have proper triggers to make sure that they're paid in the right way at the right time, so that the insurance industry can keep on functioning. One of the things that's particularly worrying at the moment, and Frank has strong views on this, we all have strong views on this, is the way that there are certain actions going on in the States at the moment just to try and unlock the coffers of the insurance industry, as though that's going to be some sort of panacea and solve all the problems. I mean, the insurance industry in the US has got enough problems already dealing with all the other risks it has to deal with without unlocking another a bottomless pit. I think there definitely has to be a coordinated response, but I think it's at this time, and because of all the things that are going on, it's the insurance industry that's really got to step up and start proposing to government, how do we do this differently in future? How can we build different things together? How can we build a mutual pot of some sort that responds in the way that the same way that some nat cat pots do, that responds in the way that some terrorism pots do in different parts of the world? There's no reason why this can't be done. And it would be a more systematic approach, a more manageable approach than some of what, I mean, some treasuries around the world at the moment have just gone for sort of unlimited spending. I mean, where that's going to end, how that's going to work out, what austerity will look like to put that genie back in the bottle, just no one knows as of May 2020. But it's the industry itself, I feel, has to step up and do things. And I know I can see Frank's put his video on, so Frank's going to say a couple of words on this as well. But if I haven't captured the essence correctly, Frank, do step in. But I think there is some responsibility on the insurance industry to act in a much more coordinated way on this. But all too often, I feel we're very responsive and reactive. I think this is a great opportunity as an industry. We could somehow coordinate ourselves a little bit better, not to fix this problem, because yeah, that's done and dusted, but think about how we could do this differently and better in the future, to try and mitigate some of this, because this is exactly what insurance is for, to try and deal with these issues. But there's no point at all just hammering culprits with a hammer until you get the money out of their bottom line. I'm sure John and Andrew have got thoughts on this as well, so I'll stop.
Thanks, Steve, for taking the hard question, I guess, from the industry perspective. Andrew, I just had one point, and then you see it from a broader from a broker perspective. So I think the breadth topic is an interesting view. But the one thing I'd say, and on top of really what we're talking about there, is the risk transfer and the claims payment side of things, which is very emotional. There's a big topic around business interruption. But we should also not forget the mitigation component. And there, I think there will be a lot of working together, learning from it, right? But I mean, if we got anyone sitting in the petrochemical industry, for example, chemical industry, just on we talked about the reopening, our studies with our risk engineering teams tell us that nearly 50% of all the safety issues and incidents and accidents actually happen during the shutdown and the reopening, right? That's right now as we get back to work. So there's a lot which we do with mitigation through working with the brokers, with the risk engineers, if it's property, but also, cyber. There's many different topics. So the mitigation is important. I think we'll have a lot to learn about what we didn't know about the pandemic. So you will see both sides, mitigation plus the transfer implication. But I think Steve really captured that well, and obviously representing it from a different angle. So I'll hand it over to Andrew just to add to that.
Yeah, Steve, you hit an incredibly important point, right? The insurance industry is not a bottomless pit. So contrary to popular belief, whilst C-19 has been happening, the world of natural catastrophe and other incidents hasn't stopped. Typhoons have continued to happen. I mean, lo and behold, there the west coast of Australia has just been slammed by an improbable hurricane that comes in and hits them at typhoon that hits them at the worst in 10 years. Now, the impact on the mining up the west coast, we still got to see what the output is from that. But the claims are what they are. They're going to continue. One thing that I expect is going to come out of this is twofold. Jonathan touched on risk mitigation. There's something that's going to be really important around C-19 because the numbers are just so big, and that's going to be data. If companies can't produce sufficient data to substantiate why they want to get the cover for C-19 and its future, C-20, C-21, C-47, whatever we get to, you need to be able to show that the risk mitigation controls that are there, you're going to have to show company infection rates, you're going to have to show your own control plans, you're going to have to show how your work from home, your return to work programs worked, to really convince insurers to give the cover. I think the days of walking into this and thinking we're going to get pandemic, epidemic type covers thrown in are probably gone. We've already seen reaction from the insurance and reinsurance market removing cover and imposing exclusions for cover for epidemics and pandemics. Those pandemic exclusions are already being dropped in and taken away from renewals in many countries. What we need to do now is go back with sufficient data and risk mitigation measures and controls around saying our population's not infected. I can tell you why they're not infected. Here's the data to substantiate that. And here's why certain activities should continue, or why my business should be allowed to continue to run the way that it has and have cover in the event that it happens, is going to become so important. I don't think we can just rely on the industry to open up and react and go, don't worry, we got you. There's just not enough money there. If you looked at a recent study that was done and it showed how fast we've got to the value of claims that we've got to since the last one, a bit like your economic crashes, we're down to every 2 or 3 years now. We're not at one in 100 year type events anymore. We're one in every 2 or 3 years. The industry just can't sustain that. It's not practical. So I do agree that the insurance industry, as the behemoth that it is, has a duty to try and look after its policyholders and those that have invested in it for so long. But there does come a point where the money runs out. And so I think getting to best practice is going to be important. Whether or not this advocates a growth in the number of captives for risk managers is another point to consider. Now, the worst thing we want clients to think about and risk managers to think about is, the insurance industry is turning its back on us. They want us to insure it all ourselves. I don't think that's not the point I'm trying to make. The point I'm trying to make is as part of getting back to the point where you get the cover from the insurers, is a bit of that willing has to be there yourselves. Have the data and the analytics to support your case, risk mitigation and controls, and I'm prepared to take some of that hit myself. Here's how much I'm prepared to take. Now I want some more cover. Will it be sublimited or full value? We don't know yet. What the extent of the policy wording will say, we don't know yet. There are a lot of unknowns, but I do think, Steve, and I know you get this 100%, around how well we prepare and submit our own risk mitigation data is going to be critical to the future of getting of the event.
Frank, as are you announcing the
definitely I mean, I agree. Important in my eyes is the fact that the development from natural catastrophes or terrorism in order to develop some funding. Andrew said about at the end of the day, we can't, realistically speaking, we can't rely on only the insurance industry to cope with the economic impact of a pandemic of this nature. This being said, I'm still to be seen in terms of looking at the insurance industry, who is obviously involved in these state-backed schemes, to highlight the best practices they would like to see being deployed, being implemented by corporations so that they can benefit from these schemes. I'm talking about prevention and protection. So we know that it's still very disappointing when it comes to natural catastrophes, where basically most of the schemes we have in place are not really valuing the good risk management being put in place by a corporation, like for instance the localization of your entities, etc. Where basically it's like if you are in a nat cat prone region, the price you pay, the tax you pay, the rate you pay for this to benefit from this scheme is basically the same. Terrorism the same, etc. So I'm just wanted to see how Jonathan and Andrew would react to this point. How can we help the insurance industry to be a bit more vocal with states and governments about if companies, organizations, corporations wants to benefit from future schemes like this regarding pandemics, we are going to look at a series of good risk management practices being implemented to value the ones who are properly managing risks.
Andrew, Jonathan?
Just a comment on my side, Frank, and good to see you again, Frank. It's been a while. I think he's spot on. We had a discussion, just being a bit transparent on how we see it internally, at our executive level, not too long ago, where we were basically challenging ourselves whether we're doing enough within the industry and whether the industry is doing enough. And a little bit of a conclusion you could say is, look, the banking sector moved quite quickly early on and influencing and providing insight, right? And you see that with a lot of these relief packages and everything actually being channeled not just through the central banks, but through the private banks. They're very much part of the ecosystem of the recovery, etc. I think we should, if we look at ourselves in an industry, we might, in hindsight, say we didn't quickly, as an industry, react to actually influencing governments, well, not influencing, but partnering and sharing a lot of these expertise. And I think a lot of that was just trying to get to grips with what this COVID actually means for us and what it means for our own balance sheets and exposures and etc. So I think, Frank, you start seeing that ramping up now, and certainly in challenging ourselves, we are now a lot more proactive in taking a lot more proactive approach with pushing the industry associations as well. So I'd like to think there will be more ramp up in some of these topics around pandemic pools and how governments should react to risk mitigation will start becoming topics that we coordinate a bit better rather than individual country. But that's been my involvement in the discussion and our reflection. I think we need to also be self-critical at sometimes and learn from that. Andrew.
Yeah, how do we view pools? I think we see national pools or regional pools being incredibly valuable. We've seen them be very successful. Look at the earthquake pool coming out of Turkey that's been around forever. That's been massive. Right and Strike in South Africa for terrorism has been incredibly successful. One of the big differences, I guess, around pandemic is the sheer scale of the loss, of the economic loss. The scale of this loss is still well away from any number where anyone's prepared to put their finger on and say, we know what it is. And so, that point then really gets back to, okay, that's fine, we create a pool, and how much is the pool worth, and where does the funding come from, and where does it stop, and who does it pay out to first? So all of those rules, you can take a lot of learning from what other countries have done, but I think we need to be a little bit careful of thinking that that's going to be the solution. And if I've misunderstood you there, Frank and Steve, please correct me, but as part of the solution, I think a pool has a very important role to play. but it again is not in the same way we referred to earlier is Jonathan and the other insurers and reinsurers are there, not bottomless pockets. The solution on risk transfer, no, and nor is the pool. It's a combination of everyone working together. And I think you made that point. I think you made the point earlier, Jonathan, when you talked about sharing best practices. This is where government, insurers, reinsurers, and the private sector and public sector needs to work together to come up with something that's workable. I don't believe we can put this on the shoulders of any one responsible party. But I do take your point around getting input from insurance sector itself and risk managers. I think that's critical.
So, guys, sorry, did anyone want to say something? Otherwise, we're out of time. So what I'll do is I'll just quickly wrap up because I thought being a Singapore-hosted panel, it might be appropriate to end with the 5 C's. So the first one I thought was interesting, a point raised, was control. So essentially, if you look at the aviation industry, they don't want you to go to the airport or book a flight unless you're fit to fly. So this concept of self-control or self-direction is really important. The second one around confidence. So the Wuhan government actually did 6.5 million tests. Everyone in Wuhan was tested, and they only found 200 cases. So again, that was not so much about science, but rather just to show people that they can feel confident to re-enter the economy. The third one is around certainty. And again, this would definitely go to manage. So in terms of certainty, when the return to work uncertainty, different jurisdictions, different countries, some of the tech companies said, right, for all of 2020, you don't need to return to work. So you can plan for your life for 2020. And then Twitter went one step further and said, you never need to return back to work. And they literally said, work from home forever. So there's a question around how do you bring certainty to your organization and to your workplace? The next one around continuity and the last one around cover is really, I think, where the industry, your industry, needs to step up to what Frank said, to what Andrew said, and to what John and Steve and Chester have said. I think the insurance industry needs to think rather than just defensive, but offensively. I've learned so much from this panel. Thank you so much. And on behalf of Prima and from all the panelists, thank you very much for your attendance. There's been some fantastic questions we haven't got around to, but if you'd like to stick around, I'm sure the panelists will answer them. But otherwise, please reach out and please stay in touch. So thank you so much for your time and stay safe.
Thank you.
Thank you very much. Thank you. Thank you, Doji. Thank you, Andrew, Steve, Chester, and John. Thank you so much for this. So to everyone, before you leave, we do like to ensure that we get a survey for the session. So please rate the survey. And as you are doing this, we also like to encourage you to join Parima's next session, where we will be talking more about, what are the kind of prevention, activities and practices that we are trying to highlight. So in the coming, for example, Monday, we would have Belfor give us their case study on how do they do a deep disinfection of the Diamond Princess cruise, and also what are some of their advice to risk managers on how to reduce the risk of infection within the workplace. So that's quite a cool case study if you would like to join us on Monday, and this is open to everyone in the industry as well. Parima also has weekly sessions that we have lined up till July, so please do look out for these in the calendar and sign up if you can. Thank you very much for this, and I wish everyone a good weekend ahead. So thank you very much. Thank you to all speakers.
Thank you. Bye-bye.
Thanks, everyone.
Bye.
Bye.
Thank you.
Thanks, Prima. Thanks, Frank. Thanks, everyone.